What is wrap or a wraparound mortgage? Especially in this market with high mortgage interest rate, it can be very tough for both the seller and buyer. A wraparound mortgage is a home loan that allows the seller to maintain the existing mortgage, while the buyer's mortgage wraps around the existing amount owed. Wraparound loans mean that the buyer will make a monthly payment directly to the seller, oftentimes at a higher rate than the original mortgage rate. Let's say the original mortgage rate is 3% and the wraparound mortgage is 5%. So the seller can make a profit between the difference. But for the buyer, still the rate is lower than traditional bank rate, which is about 7% nowadays. Let's watch next video. I'll explain more.
Wraparound mortgages in real estate. A simple explanation. In real estate, there's a creative way of buying and selling houses called wraparound mortgages. Let's see how it works with an easy example. Imagine you find a house for sale at $180,000. After checking similar houses in the area, you realize it's worth $200,000 after some repairs, which will cost around $10,000. The seller currently has a mortgage of $100,000 on the property, with an interest rate of 3.5%, and they still have 20 years to pay it off. Many investors might ignore this deal because it seems like there's no profit to be made. But if you're a creative real estate investor, you can make the most of this opportunity. Here's how it works. The seller owes $100,000 to the bank, paying 3.5% interest. To create a deal, you can offer the seller the asking price of $180,000 with a new mortgage at 4% interest or higher. You negotiate this with the seller. So, you're essentially giving them a secondary mortgage, wrapping around their existing $100,000 loan. Now, you make payments on the new $180,000 mortgage you gave to the seller, and the seller, in turn, keeps making payments on the original $100,000 mortgage they have. The seller gets to keep the difference. This strategy is useful when a seller insists on selling close to the market value and won't come down on the price. With a wraparound mortgage, you can pay more for the property and still come out with a good deal. Some important things to remember. The seller keeps the existing mortgage in their name, so you won't transfer it to your name. You create a secondary mortgage, similar to taking out a second loan, which wraps around the existing mortgage. You'll need to pay taxes, insurance, and other expenses related to the property. The benefit for you as the buyer is that you get the deed to the property, but the mortgage remains in the seller's name with the secondary mortgage wrapping it. Now, you might wonder why buyers would choose this method instead of getting a conventional bank loan. The answer is that many people are denied traditional loans due to various reasons like poor credit, recent bankruptcy, or irregular income. Many self-employed or blue-collar workers don't like to keep their money in banks. As a result, these buyers are considered non-bankable, but they still need a place to live. It's essential to use a real estate attorney to handle this type of transaction properly. You must make your monthly payments to the seller as agreed to avoid any fraudulent behavior. The seller can also get a document confirming that someone else, the buyer, is paying off the loan, which will no longer affect their debt-to-income ratio. Here's another exciting benefit. With a wraparound mortgage, the seller can sell the house for a higher price while keeping the interest rate low. Nowadays in 2023, when you get a mortgage from a traditional bank, the interest rate is around 6.5% to 7.5% based on your credit score. So, this kind of deal is a huge advantage for both the seller and the buyer. In conclusion, a wraparound mortgage is a creative real estate strategy that enables investors, sellers, and buyers to work together to achieve their goals. By understanding how it works, you can explore this method to find opportunities in the real estate market. For more information, and if you're a seller or buyer who wants to use this strategy, please contact me.